a soft landing, a hard landing economically. I mean, we might be about to get a crash landing. The S&P 500 coming down to maybe 3,500, 3,600, the lows from back in June. But I mean, I think they could easily wash out below there. You want to talk about pain? That would inflict a lot of pain.
Please join us for our next live stream
Sunday, September 11th
at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be
Sunday, September 11th,
9 p.m. Eastern. See you then.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Craig Hemke, a.k.a. Ted Ferguson, joins us today. Craig was a licensed security professional for nearly 20 years and disgruntled by the fraud known as financial services. He retired to a career as a serial entrepreneur in 2008, and though otherworldly in his abilities to forecast price movements, the Turd is not a soothsayer, a psychic, or a witch. After all these years, he simply has a decent understanding of the forces in play in the precious metals markets. And we're delighted to have Craig join us once again today. It's time to saddle up and silver up for Craig Hemke. Craig, welcome back to SBTV. How are you doing?
I'm fine, Patrick. Nice to see you, my old friend. It's good to be on with you again.
Glad to have you back, Craig. Really do appreciate you being here once again with us. Fed Chair Powell recently spoke at Jackson Hole, and he came out a bit more stern in body language and also in words. And there were a few notes that I want to go over that Powell had said. He said, reducing inflation will bring a sustained period of below-trend growth. Softening of the labor market conditions and battling inflation will bring pain to some households and businesses. Now, Craig, these 3 points, could you spend some time going over these points, and what tools are the Fed talking about when they say that they have and they will use these tools to get that target inflation rate back to 2%?
Oh, Patrick, I can spend all kinds of time on this. So jump in and cut me off if I go on for like more than 5 minutes here. God, where do you even start? Well, we can go back to April. Bill Dudley, who used to run the New York Fed, was interviewed, I think, on Bloomberg on about the 7th or 8th of April. And he said that the Fed's goal was to inflict losses. Those are his words, inflict losses on stock and bond investors. They were trying to drive a reverse wealth effect and destroy demand to get inflation down. That's what he said was coming in April. And I wrote about it a couple of different times saying, okay, if you're in the stock market, you better get, this is a warning. And what the stock market went up, at least went sideways after June, and then rallied. And, in the time since, look what's happened. What's particularly frustrating is the demigod hero worship of these Fed people. They're treated as if, they're infallible and that they really know what they're doing. And all they have to do is look back. I mean, transitory, right? Inflation was transitory. A year ago, they were still talking about no rate hikes until 2023. Okay, so the first thing is that, how anyone trusts them or believes them or thinks that they are in charge is one part of the story. Then the second, I was on an airplane watching and listening to Powell after the July FOMC during his press conference. And he said, and I quote, "We have moved," in the past tense, "we have moved expeditiously to the neutral rate. And now going forward, rate hikes will be data dependent." He said that 5 minutes into his press conference. Gold was about $17.36 at the time. It immediately rallied about $20 and continued up to $18.25. 4 weeks later, he openly contradicts himself with that speech at Jackson Hole, like you said. So how do you believe anything? I mean, one, they're wrong all the time. And then two, they just go, it's like they're just making it up as they go. All in this name of creating demand destruction. Now, look, I rail all the time against the Fed and how their policies for the last 50 years have really, really crushed the lower income and middle income people, right? Standard of living has fallen. the wealth gap, the income gap have all widened, right? So if we're going to crush assets, okay, fine, because mainly you're crushing, the 10% of the people in the U.S. that own 90% of the stocks, 90% of the assets. Okay, fine. So that's the other 90% that don't even have $500 in savings. They're not going to really feel the impact of the stock market crashing. But they're getting crushed regardless. One, inflation's, the chicken that's gone from $3.50 a pound to $5 maybe isn't going to go to $6 next year, but it's not going back to $3.50. They're just talking about trying to hold it at $5. All these people that are working 2 and 3 jobs to try to make ends meet, it's not going to get any easier for them. In fact, they're going to start losing their jobs or accepting a pay cut. So, I mean, this is just horrible. This is just awful, terrible. And yet, these Fed people are treated as if, like I said, they're infallible. And I'll give you one more thing, Patrick. This drives me crazy. Powell himself will admit that they only have a couple of things they can do, right? They've got maybe a dial on Fed funds that they can turn. They can increase the balance sheet, decrease the balance sheet. They can set up swap lines, and maybe turn on a repo facility or something like that. But they're pretty limited in their direct impact. But again, everybody just goes off as if, and they seem to go off as if, well, we're going to turn this dial. That's going to make A happen. And then we're going to turn this one, and that's going to make B happen, and everything's going to be fine. That they can run rates up and then get to a point where they can run it back down and everything's going to be fine and normal again. And that's crazy. We're far more complicated than having it just be some binary choice like that. So anyway, like I said, I knew I could go on and on. I'll stop here. I think people are figuring out that these central bankers are just simply tools of the politicians and the other bankers that run everything. And they're also figuring out that these markets, particularly futures markets, are absolute shams, scams, and frauds. And we're running into, ultimately, a crisis of confidence that is going to spiral out of control, and I don't know where it heads next. It's very interesting times lie ahead.
Speaking of the unemployment, the demand for workers exceeds the supply of workers. Now, is this because businesses, they need the workers, but the workers want more pay in order to offset the inflation, and we may be now heading into a wage price spiral?
Oh, absolutely. And that's been going on now for some time. In fact, I think I first uttered the word stagflation in June of 2020 as the ultimate outcome of COVID and the lockdowns and the monetary policy and the QE and the PPT loan. I mean, everything else that went with it. And I mean, it's clearly where we are now. The wage price spiral has been happening. And at the same time, wages have not been keeping up. Real wages, inflation adjusted wage increases have been falling, have been not keeping up with inflation. And so when you look at this jobs thing, where they have all these job openings, but people are still quitting, and there's this conundrum that shockingly the Fed can't seem to get a handle on. If you dig into the employment report, especially over the last 6 months, what you're finding is that people are losing a good paying job, say like a salaried white collar job making $60,000 a year. You see that in the establishment survey, but they are taking on 2 or 3 part-time jobs. Okay. And you see that in the household survey where people are either getting forced out or losing their job, and they're replacing it with 3 others. Now, the Bureau of Labor Statistics looks at that as a net positive of 2 jobs. Cute, huh? And at the same, but it's not. You're thinking about people that are working 5 jobs, in a household rather than people working 2. So and then that kind of creates this shortage of workers in a way because all those jobs where there are all these extra jobs that aren't being filled. And it's a very odd situation. And again, this all gets back to COVID and the COVID response and businesses trying to manage that still. And I don't economically see a way out that's straightforward, easy for the Fed, the demigods to fix.
I just want to get back to Powell again. He was pretty soft with his words before, words like transitory and things like that. But this time around, he used the word pain. He used the word
Yeah.
pain, and why is he now being so, let's just say, forthright with this sort of a warning?
Yeah. Like Dudley, right? So that's what Dudley said. Inflict losses 5 months ago. I don't know. Does he know what's coming? Does he know that it's inevitable? This economic pain. And this winter, Patrick, is just going to be awful around the world, particularly in Europe. He must understand. I mean, he seems like at sometimes a rather straightforward, honest guy. He must understand what's coming, and so he's just going to talk about it. I do think the 8-minute speech was designed that way so that there can be no misunderstanding. If that's what he thinks happened in July, I'm just going to come out. I'm going to say this 8 minutes, and I'm done. And the markets have really done nothing but go straight down ever since. They talk about a soft landing, a hard landing economically. I mean, we might be about to get a crash landing. We've written on my site, and I know a lot of other people have talked about this, the S&P 500 coming down to maybe 3,500, 3,600, the lows from back in June. But I mean, I think they could easily wash out below there and could fall all the way down to 3,000 or even lower from its current levels, up 38, 3,900. That, you want to talk about pain? That would inflict a lot of pain on people who then, it's that reverse wealth effect that see, wait a second, my 401k, they're looking in their statement going, I think maybe we better hold off buying that new car because, my retirement's got from $300,000 down to $200,000, that sort of thing. So the pain is coming, and maybe he just knows that it's coming, and he's trying to brace everybody. It's impossible to say what's going through his mind.
If you're enjoying this interview with Craig Hemke and I, please consider subscribing to our YouTube channel and let the algos know you'd like to see more content like this. And if you'd like to learn more about systemic wealth protection, please visit us at www.silverbullion.com.sg. Yeah, so true, because it seems like Powell is he knows more than what he's really letting on to, and with this, again, his language that he's using, maybe he's a little bit late and trying to lay the groundwork where Payne, maybe he intends to take up a position that Paul Volcker did, where he really raised the interest rates.
Well, he may run into a case where involuntarily he is going to raise them a lot farther than he thought. We've been talking about this, Patrick, in the metal space for over a decade now, right? The idea that the Fed is the buyer of last resort, right? Let's look forward a year for the U.S. economy and the annual budget of the U.S., that sort of thing. I mean, we're running $1 trillion deficit anyway. They're doing all this other extra spending. One, where's that money going to come from to fund the government if China's no longer buying? They're liquidating, right? Russia's not buying. Japan's not buying. Japan's doing everything they can to support their own bond market. So who's the buyer going forward when the Fed even says they're selling? I mean, rates could really get out of hand. Already 30-year mortgage rates in the U.S. are over 6%. And what if they go to 9%? What if what's that going to do to credit card? What's that going to do to states, cities, the federal government, the interest on the national debt? And then you factor in tax receipts. If the economy slows, into a deep recession because of all of this, well, then your tax revenues are all going to fall. And that deficit hole gets even larger. Well, again, where's that going to come from? So this idea that the Fed, we're going to run off our balance sheet, we're going to let rates go up, is folly. And you would think people would understand this by now, because they've played this game 3 or 4 times since the onset of the financial crisis in QE in 2009. They go through this rigmarole where they say, yes, we're going to be running off our balance sheet and we're going to let rates normalize. And everybody believes them, when the reality is the math. And eventually they got to just turn on the spigots again and blow even more money than they've done before to try to keep the plate spinning. That's what they're going to do again. That's why I sit here. It's like Groundhog Day. I sit here and I'm watching gold and silver just get smashed and thrown out, and driven lower in the futures markets. But this is no different from when, say, like the Hui gold miner index on January 19th of 2016 hit 99.19, and everybody said it was going to 60. And 8 months later, it was at 270. Or you think March of 2020, silver went to $12.50, but you couldn't buy it for anything less than 24. And then what happened? By August, it was 28. I mean, we've seen this countless times before, and that's why. I sit here. It sucks. I hate looking at the markets every day, and it's just grueling to watch this downtick after downtick. But we've seen this so many times, and the Fed is not going to crash the entire global economy and the U.S. economy, have the banking system collapse under the weight of all the derivatives and everything else. They're not gonna. And so there will be a point where all of this rhetoric just gets thrown out the window again, and they turn the printers back on, and everything. But man, between now and then. It sure is frustrating that the markets in general just haven't seemed to learn that they're full of crap, and they're letting them get away with it again.
Is this where this whole Inflation Reduction Act, I think, was called, and paying down student loans? Is this part of the plate spinning?
Oh, absolutely. Right. I mean, again, you think of the inflation. I don't even get me started how words don't mean anything anymore, right? But that's all part of it. I mean, what the U.S. government now, and when Volcker was in charge of the Fed in 1979 and 80. The U.S. national debt wasn't even $1 trillion, right? The annual deficits weren't even $100 billion. I mean, I remember when I was in college and in high school when Reagan ran it to $250 billion. Well, Reagan and the Democrats in Congress, and people were freaking out. $250 billion annual deficits. U.S. GDP to the deficit was like 25 or 30%. It's 125% now. So this idea that, again, what amazes me is this just keeps getting swallowed hook, line, and sinker, by the investment banks and the financial media. And maybe that's just because they are so incented to swallow it because they're trying to keep all the plates spinning too. But what will happen again is, and it's not going to take 5 years for this to happen again like it did from 14 to 18. The Fed is just going to create a crash. Everybody's going to freak out. They'll be forced to start backtracking. The printers will come on again, and gold and silver will soar again, as they have the last 3 or 4 times we've gone through this. But man, for now, this is still pretty painful.
Another Fed head, or at least the president of the Minneapolis Fed, Neil Kashkari, he recently came out and he had some sort of an interview, and he had said that what problem does a CBDC actually solve unless you want to monitor every transaction the way China does, or impose negative interest rates, or directly tax accounts? And so what I'm asking here is, are central banks losing control on one end in order to rein in control with CBDCs on the other end?
You can't help but think that, right? Because again, this is a global movement toward these things, and I know you and I have discussed this over the years. It generally put that under the catchphrase of war on cash, right? Eliminate physical cash, so that your entire financial well-being is just a series of zeros and ones, and then they can do to you, like I said, all kinds of things. Negative interest rates, even at the retail level, negative interest rates at your bank, but they can also force some type of social control, right? You will be quiet. You will not resist. You will not put up any defense against us, or we will wipe out those zeros and ones, right? Or hey, we don't even need an act of Congress anymore, so why even vote? Because the Fed will directly be able to put central bank digital currencies into your bank account, or into your bank's bank account. That's what you would say, I guess, onto your bank's balance sheet. So yes, that's all about expanding their reach and expanding their control. And it's very easy to think, oh yeah, because look, Patrick, it's not like I'm some sort of genius. You're a smart guy, but you're not Edward Einstein, right? So if you and I can figure this shit out, right? You got to know that these cats, they all know what's going on. They know it's not sustainable. And so you can't help but think that they're planning their next move, right? They're setting the table for the next stage. And I don't know, maybe we're going to buy all this, we own all this gold and silver, and who knows what happens to it. Maybe they'll try to come confiscate it all, or if you go to liquidate it and convert it into central bank digital currencies, they'll charge you some 90% tax. Who knows? I mean, I don't know. I hope not. But the future is so uncertain in terms of how we're going to get out of this. But the only certainty it knows is that we are in this. And I think all we can do is just be diligent, try to stay ahead of the curve, try to pay attention to what's going on, and prepare the best we can for about all eventualities. So for me, that regardless of not knowing how it eventually turns out, I know that still means I got to own physical gold and silver. I got to keep buying it. Man, if they're going to drop silver down to 14 again, oh, hell's bells. If silver wouldn't go below 14 between 2014 and 2020, it's not going below 14 now, right? We're only, $3 some odd cents away from that. So if they're going to do that again, I'll just, you know what? I'll swap as many dollars as I can for it and then take my chances on the back end.
Yeah, that's the thing, Craig, because when you really take a step back and you look at things, you really understand that things, they are really beginning to get out of control. We are in some sort of a transition. But yet, why aren't we seeing a more positive price action for gold and silver?
Well, remember, this is a growing realization too. I mean, you and I and everybody in the precious metal space have recognized for over a decade the fraud and the scam of futures market price discovery. You're trading futures contracts to find price discovery, but the futures contracts are bought with money that speculators don't have on margin. Speculators don't intend to take any delivery at all. The contracts are sold to them by banks that don't have the metal to back them up, and they never make delivery. I mean, there's a handful of deliveries every month. It's actually more than it used to be. But it's a scam in the first place. And now we've seen that now ripple. I mean, it's not just in the precious metal. Look what happened to nickel back there in March, right? When nickel just soared, the LME just canceled all the trades because JP Morgan and that Chinese guy were underwater. They just canceled them all, right? Look what has just happened in the last couple of weeks with European energy futures. They just absolutely just were parabolic straight up, and then they closed those markets and made them liquidation only or whatever they did, and they came crashing back down. People worldwide are figuring out that this is a scam, that this is no way to price, if you want to call electricity a physical commodity, I guess you could call it that. This is no way to be pricing things. It allows for mispricing and all kinds of destruction. But that's exactly what has taken place in gold and silver. I mean, why are gold and silver down? Well, the COMEX contracts are getting dumped relentlessly every day by computers, mainly run by hedge funds at this point, that see the U.S. dollar spiking up, and they see that happening, the computers do, and then they sell the futures contracts. Has nothing to do with physical supply and demand. And you think just even in the last 3 weeks, silver's gone from 21 down to 17. Whoa, down 20%? Did a meteor hit the earth and all of a sudden the supply of physical silver went up by 20%? Has the demand for physical silver with solar panels and investment demand, has it gone down by 20%? No. It's all just run by the supply and the demand of the futures contracts. And right now, to almost historic levels, hedge funds are selling silver futures on the COMEX, and price just goes down day after day after day after day after day. And that's it's extraordinarily frustrating, because not only for us investors, how would you like to be, a guy like Keith Neumeyer at First Majestic Silver trying to run a business off of this kind of stuff? And what does that do to his employees? What does that do to the people who are actually digging it out of the ground? That are going to maybe face pay cuts or whatever, because of the price action through these, that's derived through the trading of something that's totally unrelated to the actual metal itself. Anyway, maybe I've gone off on a tangent, Patrick. I can't even remember what you asked me in the first place. But that's why that price you see on the bottom of your screen is going down, because what you're looking at is the value of the futures contracts, and we allow that futures market to that tail to wag the dog of the physical price. And people are figuring out that that's just ripe for fraud and a scam. And eventually, the more people that understand that, the closer we are to making a change.
Craig, you're one of the guys who definitely know the futures markets. I mean, definitely know comics. Why don't the regulators see the same things that you're seeing, the same things that all of us are seeing as far as these price influencing of precious metals? Or do you suspect they do see it, but perhaps they're told to sort of stand down from clamping down?
Yeah. Yeah. All right. Just last week, the September silver contract, which had been the front month since the July contract went off the board, the September contract went off the board at the end of August, right? And it moves into delivery through the course of September. Anybody that was still long is essentially standing for delivery, right? And people can show up during the month of September and buy a contract and take immediate delivery. Okay. When that contract went off the board and into delivery on the 30th of August, there were about 6,000 of them still open. Okay. The first night, about 5,400 contracts were delivered. Well, if you dig into that report, 5,199 contracts were delivered by the house account of Bank of America. Okay, the proprietary account of Bank of America. One owner, Bank of America, their house proprietary account. 5,199. Patrick, the position limit, the front and delivery month position limit is 3,000 contracts. So what do? I tweeted at the CFTC. They don't do anything. They don't care. The one time I got somebody on the phone there, they said, well, it's a bona fide hedging and there are exemptions for that. What? So they accumulate this massive short position over the course of the month, pushing price down. And then, sold at whatever price. And so now they deliver it out. I don't know, ostensibly maybe buy it back and stuff. I don't know. All I know is they delivered 5,200 contracts versus a position limit of 3,000. They don't care. I'll give you one more. Okay, we all know about the JP Morgan guy, Nowak, right? Head of global precious metals trading on the board of the LBMA that just got convicted in federal court, right? Of market manipulation, everything else, right? And in precious metals. During the period 2008 to 2016, the Department of Justice found the complaint, hundreds of cases of trying to manipulate the precious metals market. Inside that same period from 2008 to 2013, the CFTC was allegedly investigating silver manipulation. And they closed that manipulation in 13, said, we couldn't find anything. Well, no, wait a second. How could you not? The Department of Justice found all, well, we're just understaffed. Well, then what the hell good are you? So is the regulator co-opted? Okay, maybe. But they don't care. They clearly do not care. The position limits get overrun. Doesn't matter. All this in this manipulation that has been now convicted in court. We couldn't find it. Well, what the hell?
Yes, that's the thing. Why aren't these guys who are in these positions to protect the investor, including the retail investor, why aren't they simply not doing their job and always take the side of the bigger hedge funds, institutional investors?
Again, Patrick, during that time at the CFTC, during that silver investigation, the head of the CFTC was Gary Gensler. Gary Gensler leaves the CFTC in 2014, fiddles around for whatever. His next job was the campaign finance director for Hillary Clinton. Okay, how'd that turn out? Well, whatever, she lost. Then he fiddles around again. You know what his job is now, Gary Gensler? He's the head of the Securities and Exchange Commission. So do you just simply have the fox guarding the hen house the whole time? Is that what his job is? It would seem that way. Seem to be he's politically connected, financially connected, and his job is to look the other way. And he does a pretty good job at that.
Yeah, from the position you sit in, Craig, what can we do? This thing has to be sorted out and fixed.
You could say that not just about the precious metals markets or all markets. This is societal at this point. The lies are pervasive. The criminality is pervasive. What did we just find out today? Some hedge fund connected to George Soros, the guy that ran it, just got indicted by the Department of Justice for manipulating Forex. The criminality is everywhere. Words don't mean anything. We mentioned that earlier. No, we're not in a recession. Wait a second. 2 negative quarters in a row of GDP is a recession. No, it's not. So if we get the third quarter in a row, they're going to say, well, no, it's only 2 quarters in a row. I mean, what's next? And so you can't help but feel that, we're in that fourth turning epochal change type area here. And, within the precious metals pricing, that's just part of a much larger picture. And that's why I mentioned other people, institutions, figuring out that these futures markets are a scam. The nickel thing woke up a lot of people. This European energy thing has waking up more and more. And people waking up is really kind of exponential. You remember how when COVID was coming on, we all had to learn about exponential growth, right? If the water is only an inch high and you're 6 feet tall, that's nothing. But if it doubles to 2 inches, you still don't really notice. Doubles to 4, okay. Doubles to 8, 16, 32, and 64. Now it's almost over you. And then one more double and it's over you. The awareness of this criminality and of the scam of the financial markets and the monetary system is going to grow exponentially as well. And then you're going to hit a point of a sea change. Now, again, when does that happen? Who knows? And is that, how ugly is that going to be? I don't know. But these are all events for which I've been preparing now for a dozen years. And that's what I tell everybody on my site. And I'm not sure how it ultimately all plays out. But I do know that I'd much rather take my dollars and convert them into physical gold and silver while I can, and then take my chances on the back end.
A lot of us here, we're already in that space as well. But when Powell is talking about pain, do you think it's going to be that pain that is going to start to move more of the masses into silver and gold? And will there be much supply left for them, much less the premiums should be going up as well?
Absolutely. And that's what we've always talked about. You got to get some while you can. And you certainly don't want to own an unallocated account. You don't want to own an ETF like the GLD. Some certificate from a Canadian bank. You don't want any of that. You want the actual physical metal. You got to have that because it's that physical metal that underpins this levered system, this rehypothecated multi-levered system. And when that unwinds, it's who's ever got their hands on it now is the owner, right? So you got to own it. And the crash that sure looks like it's coming in the stock market, where it breaks down below the 200-week moving average and falls all the way down. I mean, you can make a case for like 2,800 in the S&P as if you bottom out at the same, start connecting dots on the chart out of 2016 and 18 and 2020, you can make a case S&P could fall a full 1,000 points from here. That's going to freak people out. Okay. What I get back to this, what we talked about earlier, what has happened in the past is that, when the change has been made, either coming out of 15 into 16, coming out of 18 into 19, in early 2020, through COVID, you get this mad rush of everybody into precious metal and the futures contracts and the mining shares. And then the momentum wears off and people just kind of go away and they start believing the Fed again. One of these times people are going to figure out that these central bankers are full of crap. I mean, I would think it will be this next time because what's the next QE program going to be? Went from 600 billion to 700 billion to 1.2 trillion to 4 trillion. What's the next one going to be? 6 trillion? I mean, at some point, enough people are going to figure it out that the prices aren't going to go back down. And we're going to get into this period like we had in the 1970s where gold went from 100 to 900, and mining shares went from 30 cents to $30. Could that be the next time? Well, maybe. Should be. And that's why I own every ounce that I've ever owned. I own every mining share. I haven't sold any of that stuff because, again, I know how this is going to play out because I've seen this movie now already 4 or 5 times before.
Yeah, I completely agree. It's definitely time to be buying metals right now. But Craig, when you wake up each morning and start looking through the news and the tweets, can you tell us what goes on through your mind?
Oh, God. Yeah. It's, where do I start? How do I say this? I tell people on my site that they pay me the $15 a month so that I have to kind of go through this for them. That they can live their lives. They can check in every morning or every afternoon with a podcast, and I will tell you what I had to watch. Okay. I had to wake up, and everybody watches it anyway, but I had to wake up and see all the red and across the board on the commodities, see the metals getting smashed at the COMEX Open, see the nonsense on Twitter all day long. That's what they pay for me to do. What do you get kind of numb after a while, it's down so far, oh, look at that. Now we're going below 1700. Well, okay, I suppose. Or, we'll see how it all plays out. But what we got to start watching now are those lows, or below 1700 that have held on countless, 4 or 5 occasions. It reminds me greatly of 2011 to 2013, where for about a year and a half, 1550 held. And then that got wiped out in 2 days in April of 2013, and gold fell $200. So when I get up in the morning, I think about that. I look at, whatever the latest nonsense is, whatever the latest spin is of some kind of economic data. I shake my head. I put my head in my hands for a while like this and think, oh God, how am I going to do this again today? And then I just soldier on. Again, if anything, because I've used this line a lot lately, Patrick. I've got an old friend named Brent Johnson, who runs Santiago. He's the dollar milkshake guy that he kind of got stuck with that, just like I got stuck with Turd Ferguson a long time ago. But Brent has always said you can either believe in magic or you can believe in math. And if you believe in math, you got to own some gold. And I believe in math. And though they continue to construct and try to shore up this kind of imaginary debt-based world, I just know how this is eventually going to sort out. And so while I got my head in my hands and I'm thinking, how can I do this for another day? Usually I remind myself that I know how it ends. And I just try to soldier forward, with a brave face and just try to keep it warning as many people as possible about where this is all headed.
All right. Craig Hemke, before we wrap up, can you let the viewers know how they can follow you and, of course, about your TF Metals report?
This site, 12 years. 12. And what's amazing, I was only 18 when I started. Look what's happening. I'm 30 years old. Look at how, no, I'm kidding. But you know how you always see the American presidents that go from like young men and then by the time they leave office, they look like they've aged 20 years. But 12 years at it, I still can't believe, frankly, that we're still talking about this stuff 12 years later, that the plates haven't stopped spinning yet. But man, oh man, we're sure getting close. So come to TF Metals Report. The best part about it, I analyze things, like I said. I got to write something every morning and do a podcast every afternoon to keep people up to speed so they don't have to worry about it every day. I'll let you know what's going on. But probably the best part is the whole community. Of people around the world posting their links and what they're seeing in their part of the world. And all of us kind of working together to keep each other up to date. And I frankly, I think that's invaluable. It's not just a newsletter, that you sign up for and I'm drawing pretty charts and guessing, as to whether we're in wave 3 or wave 5 or whatever. This is more about what I've always said, preparing for the end of the Keynesian experiment. And everybody's on the same boat. Everybody's in the same boat. We're all trying to help each other. And I think that's the real value of the site.
Okay. Craig Hemke, we appreciate the time you've given. I hope we can do this again soon. And let's see if, we start to get a break with precious metals.
It's going to happen at some point. I just worry that there might be some short-term pain. But if there is, I'm sure going to be ready to take advantage of it and just keep buying and stacking because, like I said, we know how this movie ends. Thank you, Patrick. It's always good to visit with you.
That was Craig Hemke sharing his views on the economy and precious metals. For more of Craig's work, please visit him at tfmetalsreport.com. And if you like this video, please subscribe, give us a thumbs up, and hit that bell to be notified of new videos coming out. Audio-only versions of this interview can be found on iTunes and Spotify.